being consistent in the market, sticking with your strategy isn't a feel good thing. It's a must do thing. There will be losses, there will be uncertainty, there will be even stretches of time where your performance is just average. You learn to manage your risk proficiently before you even think about making money.
Hey, what's up, everyone? Welcome back to another episode of Trading Takes, presented by me, Sam, brought to you by Investors Undergrad. Now, tonight, we've got another huge conversation and one of my favorite trading takes today. Conversation went completely in a different direction to what I expected. Tonight, we have an author, we have a fund manager, and we also have a trading coach as well. Stick around. You're not going to want to miss this. And if you do enjoy the conversation, please like, subscribe, and leave us a comment. Now, let's get into the show. Please welcome to Trading Takes, Yvan. Trading Composure, how are you doing?
Good. How are you doing?
I'm great. Thank you so much. Thank you so much for joining us. Like I touched on just before we hit record, I've been a huge admirer of your content for a few months now. And like I said, one of the beauties of hosting the show is I get to pick who we've got on. So thank you so much for giving up your time this evening. I'm really looking forward to this conversation. Just by way of introduction, just to bring all our audience up to speed, could you just introduce yourself, your market experience, and obviously your all of your experiences, please? Yeah, that'd be great.
Mm-hmm. Right. So, once again, my name is Yvan Byeajee. I've been in the market for many, many years now, Sam. I discovered trading in my late teenage years, right when I was 16, 17 years old or so, and it immediately clicked. I knew that this is what I wanted to do out of my life, and I don't know, it just challenged me in a certain way that really sort of it was just fascinating overall. And then I dropped out of college, high school, and I took little jobs here and there, odd jobs, just to save enough money for a decent trading account. And in 2006, I plunged full time into trading. Lots of ups and downs, man. Lots of ups and downs. I made a lot of money. I lost a lot of money, but I learned a lot along the way. And what I discovered is that trading is a mental game. Perhaps more importantly, it's a game you play against yourself. And this is one of those lessons that you learn the hard way, typically, right? But look, I'm at a good place in my life right now. I manage a fund for myself and a small group of investors. The fund is, does pretty well, right? The performance is pretty well. It's pretty consistent. And that aside, I run Trading Composure, which is Trading Composure is this blog on the psychology of trading. Why do I talk about this? Because it's been my main challenge in the market. As we were discussing, earlier, before we pressed record, Sam, I'm an emotional guy, always have been, right? And I don't see this as a weakness. I see this as a strength, provided you know what to do with those emotions to begin with. Provided you've taken the time to understand yourself, right? That's when your emotions become a powerful thing. But that's a little bit about me. So trader, fund manager, trading psychology coach as well, and I really love what I do. It's very sort of it covers so many different topics. It covers financial markets, uh, you know economics, covers spirituality as well, covers psychology. It touches on so many different aspects of life, and this is what I love about it. What I love about this trading endeavor.
It's incredible. And that's an incredible resume, as an American would say. And like I said, thank you so much. And that was one of the things that drew me to your content was A, you spoke about obviously yourself being emotional, but B, you spoke about how you'd overcome and how you think actually it's something that actually everyone can overcome if they've got the right tools and if they're willing to put in that work.
Absolutely. There's a big component of trading that most traders they don't take the time to sort of understand and accept. It's this idea of uncertainty. When you place a trade, Yes, sure. There are trends, there are cycles in the market, and those are broadly predictable. But when you place a trade, you don't know who's going to come in and bid prices up or offer them lower, and with what kind of financial power and the kind of ripple effect this is going to have on price action, right? And so there's uncertainty there, and it's so difficult for us to accept that uncertainty, to accept the fact that when we place a trade you don't know what's going to happen. You don't know. You can have an idea, you can have a general opinion, right? Conjecture, right? But it's just that it's not a sure thing. But most traders, what they do is that they do technical analysis. They draw little lines on a chart, you know, and they automatically assume that okay, this is telling me what the market is going to do next. And a lot of traders approach the market through this lens of okay, I'm predicting what's going to happen next. And once again, there's nothing wrong with prediction. Prediction is baked into the endeavor of trading by default. When you're placing directional trades, you're making a prediction about the future. What I'm saying is that if you don't balance that prediction mindset with a thorough understanding and acceptance and embrace of uncertainty, and quite frankly, love of uncertainty. I mean, it's going to be very difficult for you to thrive in this uncertainty ridden space. So, I don't know if this answers your question. I tend to ramble a
No,
little bit, but
no, no,
uncertainty
please.
is a major aspect of this game.
Yeah, no, please. No, I actually love that. I love rambling, and so please do. Please feel free. And um, I mean, sometimes my questions are very open ended, so please feel
Mhm.
free to. And I think it's interesting that you focus on uncertainty because I think as a trader, we're also in an interesting dynamic that we have many uncertainties. And we also have the very interesting dynamic that actually a lot of the time when we need to place a trade, we're actually placing it at the most uncertain time. And perhaps sometimes if we wait for too much certainty, actually that risk to reward dynamic actually moves away from being in our favor. And actually we might be making a poorer trade than if we were to enter or exit or whatever it may be at the most uncertain time. And obviously, we're also toying with the uncertainty of we don't know how much money that we can make in the next
Mhm.
day, month. So it's interesting that, one of your, I suppose, powerful messages that actually you've got to be able to handle and thrive, as you said, off that uncertainty.
Mhm. Yeah, no, absolutely. Look, you can't really uh, you can't really expect a paycheck out of the market, right? You have to really get to a point where you're shifting your mindset when it comes to trading. You if you go into it thinking that you'll get a regular paycheck like you would get from a regular job, I mean, you're just going to be setting yourself up for frustration, for disappointment. Trading isn't about clocking in and doing the hard work and then getting paid at the end of the day, at the end of the week, at the end of the month, right? Trading is more like running a business, and just like a business, you know, the outcomes can be unpredictable at times. There will be losses, there will be uncertainty, there will be even stretches of time where your performance is just average, right? So once again, the market doesn't hand out regular paychecks. What it does is that it offers bonuses and rewards to those who have a strategy, to those who can stick with that strategy with discipline, with composure, in a risk conscious way, right? And those simply who keep up the engagement with the market, right? Because if you're not trading, if you're staying on the sidelines most of the time, you're not sort of seizing the opportunities that the market is handing you on a moment to moment basis, right? So composure, discipline, proper strategy, and edge, right? And then exposure, very very important. But then, even then, when you have those elements in place, there's no guarantee that you'll make any money in the short term. You could do everything right. You could follow your strategy to a T. You could make smart trades from a statistical probability, logical point of view, and still you could have nothing to show but losses. That is the harsh reality of this game. And this is not something to be feared. It's something to be understood and accepted and embraced.
Yeah, that's such a great way of putting it, that it's not something to be feared, but we just need to have that understanding of it. And something that I'm particularly keen to pick your brains to and to discuss is that every trader will face a moment where perhaps their emotions will override pretty much everything. And I've often said that being aware is part of the first step, but how do you sort of teach and discuss, firstly, that awareness, and then secondly, how to handle when perhaps those emotions are taking over?
Mhm. Well, let's say you're watching the market, you're placing a trade, whatever it is, and you notice this that strong emotionality within your physical structure, whether it's fear, whether it's greed, whatever it is, impatience. Uh, if you really take a moment to observe how you're feeling in your body, just take stock of that energy that's within your body right now. You 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 would notice that you're trying to escape a feeling, right? You're and that feeling is it's you're very often it's the uncertainty that's making you uncomfortable. And there's a way to work with your emotions amidst the uncertainty in a way that you're not fighting yourself, you're not fighting, rejecting your emotions, you're just leaning into them, you're welcoming them, you're befriending them, and then you're striving to look at the market objectively as it is, not as you would want it to be. No, as it actually is. What is the information that is it's giving me right now? And look, that requires humility, it requires openness, it requires you allowing yourself to feel vulnerable and you leaning into your discomforts. And I mean that takes practice. It takes practice. It takes continuous effort. And so that's why a lot of people look. Most traders they lose money in the market, Sam, and there's a reason for this. It's not a matter of strategy. It's not because the market is rigged against us. The market has, you know, somewhat predictable trends and cycles, right? Long-term trends, long-term cycles. And but so it's not a question of that. It's not a question of strategy. It's not a question of the market being rigged against us. It's a question of our own mind working against us amidst the uncertainty. There's something about uncertainty that our minds it they just abhor it. They don't like the uncertainty, and I don't know what it is, man. I don't know what it is. It's just we our brains they don't like uncertainty. If you want to get philosophical about it, maybe it's a reminder of our imminent death at some point. Maybe it's a survival mechanism. I don't know what it is exactly, precisely, but I know that when we're dealing with uncertainty and when we're having to make fast decisions in the heat of the moment, especially when money's on the line, I mean, very often we're just not good at doing this. We're not good at doing this. So this is why you need a strategy, a statistically viable strategy to sort of take the hard decisions out of your hands. Because if you're making decisions in the heat of the moment, I mean, I can bet it that you're not making money in the market, right? Because you're just following random moods, random emotions, random feelings, right, based on what's happening right now. And so trading at the end of the day, it's a game of consistency, Sam. Consistent input, consistent output. That's it. Period. End of story. If you're behaviorally consistent, if you have a framework that you're abiding by, a strategy, an edge, a system, however you want to call this, if you're sticking with that quote unquote strategy and you're being behaviorally consistent, consistent results is what you will get. This isn't Ivan's opinion. It's a statistical fact because it's just a statistical probability game at the end of the day. But most traders can't get themselves to play this game as it's designed to be played because look, we're attached to short-term results. Very simply, we want results now on this next trade, but it doesn't work like that. There's an element of uncertainty once again baked into market prices that no amount of analysis can fully dispel. And if you don't accept that uncertainty, if you don't embrace it, man, it's going to be very difficult for you to thrive in the market.
Mm-hmm. But Ivan, it sounds so easy to, when you say to like embrace uncertainty, like I think as humans, like you said, we are trained to almost run from uncertainty in the same way that there are a lot of people in jobs they hate, but it's a comfortable paycheck, or jobs they're just comfortable in because they get paid okay. So how do we truly like embrace it then?
Mhm. Well, the first Well, first, it's about understanding that losses are just part and parcel of this game. You got to get to a point where you've normalized this idea of having to take losses. And losses, by their nature, you don't know when they're going to come, right? If you knew when you would reap losses, then there wouldn't be uncertainty, right?
Mm.
So there's uncertainty precisely because you don't know when you're going to reap losses. And so you have to sort of understand and recognize that losses are just part and parcel of the game, and that a loss, I mean, it's not personal, right? It's not it's not about you, right? The market is not saying no to you as a person. It's not even rejecting you, Sam. It's simply not accepting your trade at this moment. So in other words, it's not accepting your business proposal at this time. But if you're persistent, if you keep up the engagement, if you keep trying over and over and over again, eventually it will, right? And an analogy that I like to use is this. Let's say you have a metal detector, and you're walking on the beach looking for small treasures. In about an hour's time, you may dig 20 different holes, right? Only to find a piece of trash every time. But occasionally you'll stumble across something valuable and rare, such as a coin or a piece of jewelry, whatever it is. Now, let me ask you this. Would you feel rejected every time you found trash? Or instead of a treasure? No, you wouldn't, right? You would just toss it aside, and you would just move on. And
Yeah.
it's exactly the same thing in trading. It's like treasure hunting, right? So you have this framework, that strategy, that edge that you abide by, and you're just showing up time and again. And very often you're gonna find trash, right? Losses here and there, sometimes clusters of losses. That's just natural part of that's how the probabilities show up sometimes. Loss, loss, win, win, loss, 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 win, win. Right. That's why I'm a big proponent of having this positive asymmetry element to your trading, right? So on your winning trades, you stand to make much more than you lose on your losing trades. That's a very important aspect of it because this way, you could reap clusters of losses and it wouldn't even affect your bottom line results, right? Because you would only need one profitable trades or two profitable trades to well make up for those tiny, clusters of losses. So, uh, profit asymmetry, very, very important. But yeah, understanding that losses are just part and parcel of this game. And that's not enough to understand it, conceptually, theoretically, right? Because most everybody knows that, okay, there are losses, right? But they understand it theoretically only, conceptually, right? It's not soul deep understanding and embrace and appreciation and love of uncertainty, right? And that requires a lot of sort of inner work to get to this space of just deep embrace, soul deep embrace of uncertainty and the consequences of uncertainty, which is losses, failures and all of that. So it's really requires a radical shift in terms of in terms of your perspective, right? So you're not being a victim of life anymore. You're just everything that happens, good or bad, you're not labeling it as good or bad. You're seeing you're just having this mindset of, okay, everything is working for me or on me, right? So when things are working for you, you're having profitable trades. But when things are working on you, that means that you're reaping a loss. But what am I learning from this experience? This mindset shift towards, more broadly called a growth mindset is very, very important. This is what helps you go through the ups and downs of things with ongoing stability and composure. But Sam, just let me add one more thing. I'm fully aware that this is easier said than done, right? It's very easy to talk about these topics in a very insightful way, but applying it in live trading, that's where the rubber meets the road. And that's not easy at all. All I will say is that it takes time to build a mindset required to really thrive in the market. So if you're listening to this and if you're struggling trader, try not to be too hard with yourself. Just know that good things take time. Just keep showing up in the market with your best foot forward, and just adopt that growth mindset.
Mhm.
That idea that, okay, things are either working on me or for me, and this will make a massive difference to your bottom line results over time.
Yeah, I think it's really interesting that person who, um, like yourself, one of the main things that you're talking about is actually the bottom line comes down to your edge and then accepting your edge. But I think like probably there's probably a few people watching this who, and I think whether they know it or whether they don't, they're perhaps unsure of their edge. And I see people continually say, so one of my pet peeves, for example, is someone will continuously say, and like, you know, we've all been victims to this. I've said it a few times as well, is, oh, I needed to be more patient. I needed to let that trade work. But then they've covered or exited their position early and they blame it on patience. But to me, it's like actually you aren't playing out your edge or you're not aware of your edge. How much of it is coming back down to actually that awareness of where your edge lies? Because if you, for example, knew as well, if you knew you had a 50% win rate, and this is where I know a lot of great traders that have a low, what's considered a low win rate of say 30, 40%. But I also think like that awareness that your win rate is that. If you're aware that your win rate is 30, 40%, and you're aware that you're probably going to lose 60% of the time, how much easier does it become to embrace that uncertainty?
Mhm. Mhm. This is why a big part of the work that I do with traders and my coaching practice is that, by the way, we're a whole team here, and we work with traders very closely during the trading session, and we help them stick with their strategy, with their process, with their edge, however you want to call this, because they need to see with their own eyes and through their own experience how the uncertainty resolves itself. It's not it's not it's not enough to understand it theoretically, conceptually, right? You need to see it with your own eyes, through your own experience, how the uncertainty resolves itself, how the losses resolve themselves as you stay consistent and process driven and accountable. And when you see this, how that uncertainty resolves itself, I mean, it's a massive boost to your confidence, right? And then confidence begets more confidence, consistency begets more consistency. And then next thing you know, you're in a completely different place. Financially, personally, emotionally, everything changes because you have the confirmation, not on paper, but through in live trading, and you're seeing it. You're seeing that your strategy works, and that there's no point in deviating from it, right? And so once again, very important for traders to see that process play out. But as I was telling you earlier, Sam, most traders don't do that. They don't have they emotions rule their trading because they're expecting results immediately now, and they're not understanding that sometimes good things take time, and you got to stick with it. You got to stick with your process, with your strategy, and let the numbers work themselves out, right? Because if you don't, you're just never going to find out whether the strategy is viable or not, right? Because it's one thing to backtest it and to know that it's worked in the past, but you also need the confidence to know that it works in the future as well, right?
Mm.
But for this to happen, you need to allow the numbers to work themselves out. Very simply, there's no other way to do this than in live trading. You know, s- s- staying with your difficult emotions, and then just following the damn process, and seeing how things play out, very simply.
So you've touched on there, like you need to be able to see it play out, and that confidence breeds more confidence. But does that mean then that before a lot of traders then tackle this emotional side that we do want to discuss, and I think we're all aware of how we feel with our emotions, but then does it come back to actually going back to that process first, making sure that we've got a strategy that works, back tested,
Mhm.
before we even start to think about actually how I feel in that trade, how I'm feeling about this uncertainty?
Mhm. Yeah, so back testing is a very important part of the process, right? Because you need to know that the strategy makes sense statistically speaking, right? And the way you figure this out is by going back in the past and figuring out whether it has worked in the past, and its success rate and all of that. Uh, but then there's always going to be a discomfort when it comes to following it, in live trading, right? Because of this big unknown, right? And so this work of just back testing and just learning to work with your emotions, I think you do it sort of um, side by side, right? And so you know trade trading is a very sort of holistic thing, right? It's like you work on, every little piece side by side, and then over time you get better.
Yeah, that's such a great point. And obviously, we just touched on that how you need to be open to losses, and sometimes it can go loss, win. But like one of the issues that I find, in myself a lot of the time is like, how much resilience do I have from each loss? Like if I have a bad day, for example, often actually it means that the next day is going to be pretty good.
Mm.
But how, I suppose then what can I do, and what can anyone watching this do to help build that resilience? Does it come back to that confidence in the system, or are there other things that we can do perhaps after the trading day on Friday or whenever it was? If you're, just thinking about, we're recording on Monday, so I was just thinking about Friday being the last trading day. Um, what can we do to build that resilience?
Hmm. Right. Well, of course, as you know, I'm big on meditation and introspective practices like that. Those do help, absolutely. But then, of course, reviewing your journal, your data, figuring out how what your edge is, getting to know it better, and studying your losses as well, very very important. But yeah, at the end of the day, you get better, you develop your self mastery through exposure and practice, right? There's a quote from Aldous Huxley that I really like: familiarity breeds indifference. And Huxley, he said this, what, about 100 years ago now, I think. But it's a deep statement about neuroplasticity. If you think about it, it's a statement about how the brain rewires itself as you keep exposing yourself to that which you fear. And the more you expose yourself, the less power the thing that you fear, the less power it holds over you. You're essentially gradually desensitizing yourself to those anxieties. That's really what's happening here. And um, I know this myself all too well, Sam. I've always had an intense, sort of paralyzing fear of public speaking. Right, I've always struggled with losses in the market as well, just to name these two. And it's crazy what controlled exposure does for you. I mean, I'm a living, breathing example of 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 the fact that this actually works. Right now, am I perfect in those areas? Am I a perfect public speaker? No, of course. I'm still a work in progress. Am I perfect at taking my losses with absolute composure? No, of course. I'm still a work in progress, and always will be. By the way, but really, exposure is the best way to sort of desensitize yourself once again to those events and circumstances that cause your mind to just freak out, right? And so this is why I always say, just keep showing up for your opportunities in the market. Whether you feel uncomfortable or not, it doesn't matter. You look, it doesn't matter what you feel. What matters is what you do, right? Trading, being consistent in the market, sticking with your strategy isn't a feel good thing. It's a must do thing. And so stick with the strategy and allow the numbers to work themselves out, and allow your strategy or system or edge, however you want to call this, to express its full potential. But also allow your self mastery to flourish. This is the only way out of this sort of emotional trading kind of cycle.
Yeah, that's such an interesting point. And so we recorded an episode last week with a good friend of mine, Lance, and he was discussing in the same. He's a prop trader who's had immense success, and he touched on that exact same point that as well. The more drawdowns he had, the more desensitized he became to them because he knew each time he could get out of them. Um, I still think that I still think though that it's, some people are much naturally better at it than others. I think some people really are able to switch off and just hit that reset button so quickly and come back the next day. And I certainly applaud them. That's something that I personally do have to work on. I actually find I'm much better now at hitting the reset button than I was, um, you know, a few years ago. That's for sure. So I can certainly attest that, like yourself, it's something that I'm working on a continual basis.
Hmm.
And I think as well, like you touched on as well, I think is it's very difficult to um, it's very difficult to be satisfied. I find as well.
Hmm.
Um, and that's something that I think actually, again, can elicit an emotional response.
Hmm. Hmm. Right. And you make an excellent point, Sam. And this is also why I think that it's pointless to compare yourself to others, because look, we all come to this game with our own, you know, with our own stories, right? We have we come to this game with our unique baggage, with our own experiences. We come from different walks of life, different parents, different families, different life experiences, different genetical makeup, different everything. So
Yeah.
there's no point in comparing yourself to where someone is right now, right? Because you're just living a completely different life. So focus on where you are, and focus on improving in relation to where you were, right? Very, very, very important. But in this day and age of social media, and just look, how I'm doing, right? It's it's very difficult. I'm very, very aware of this, to sort of just focus on your own thing, right? But this is an important part of the process as well, Sam. But look, I understand that it's hard to sort of uh, develop the right mindset for this game. The thing that I like to tell my student is that you need to remove your trader's cap and put on your risk management cap, because as a trader, that's what you are a risk manager above anything else. You're managing risk strategically, logically, hopefully. And that's what you're doing. I don't really like the term trader because it comes with a lot of baggage, right? So I prefer the term risk manager, and this is how I operate in terms of the fund that I manage as well, right? If we have potential investors that we're meeting, right, and I want to make sure that they understand what I'm doing exactly. What is my role in the market? And look, I'm not some sort of Nostradamus, right? I'm if they're joining the fund, they're paying me to sort of manage risk strategically and to give them exposure to the market in a risk conscious way. And that's basically what I'm doing. I don't have a crystal ball, right? And if they don't understand this, if they don't understand that I'm a risk manager above anything else, right? Then I don't take their money, even if they have $1 million in a suitcase, right?
Excuse me. Sorry, I didn't expect that. I
Yeah,
just had this building, and I was like,
of course.
sorry. Let me just
Yeah, yeah.
sorry. Let me just note when that was, and then we'll get that edited out. Sorry, I could just feel it, and I was like, I was just letting I wanted you to try and finish
Right.
your point, and I was like, oh, I can't hold it anymore.
Happens. Um, but yeah, we're we're
Well, we
we're
don't do
risk
live.
managers.
Carry
Mhm.
on.
We're risk managers, very, very simply. We're
Yeah.
we're 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 taking strategic risk in the market. We're maintaining the exposure, and that's it. That's basically it.
But so then, do you think then, like, that how we address things that you touched on there, that you don't like the term trader because of baggage? So if we were to perhaps assess ourselves based on, I mean, sometimes we could assess ourselves on something quite a simple metrics of risk management. Did we take the loss in the spot at the price point that we wanted to, and did we lose the amount that we had planned to? Does that then potentially help address someone's mindset, and then actually perhaps helps their approach to the markets?
Absolutely. Because then you're approaching the market through a different paradigm, right? You're approaching the market as a risk manager, and managing risk is arguably the most important thing that you can do in the market, right? You learn to manage your risk proficiently before you even think about making money, right? Because if you can take your losses with grace, Sam, you're unstoppable. if you learn to manage risk strategically like that, and also mentally in terms of maintaining that stability of mind, that even mindedness, that composure, you're unstoppable in the market. There's no cap on the amount of money that you can make in the market if you get good at managing your risk first and foremost. So this is very, very important.
Yeah, that's such a, and it's funny because it's something that Stan's one of the moderators at Investors Underground, is something that he speaks about a lot. Is he actually says, I'm a risk manager first. That is and that's exactly what obviously you'll say is first and foremost. That is my job.
Mhm.
So it's great to see you two. I mean, absolutely agreeing on that, and I mean,
Mhm.
I agree first and foremost as well. And I'm often reminded that actually I'm a like you said in terms about being unstoppable. I know personally as a risk manager, I'm good at that.
Mhm.
One of the things that I sometimes though it can elicit a negative response in that I will manage my risk appropriately on a system trade or on a trade that I know I have edge on, but sometimes it can elicit a response where I would perhaps take another attempt at it, even though I haven't given it an opportunity to reset up,
Mhm.
for example, and that often can lead to often it actually just leads to paper cuts and
Mhm.
small cuts. But obviously, like after a while, like there are cuts, so many cuts, and all of a sudden you've got quite a large wound, and it requires obviously perhaps obviously require treatment. So, I mean, what come up is that something that I think is something that a lot of people are going to be watching this probably do as well. What can we do then to perhaps offset some of those cuts that we're going to take when we are, being a good risk manager, but then it leads to that negative response or negative trade after?
Mhm. So one of the risk management strategies that Baltido Jones uses, and he is that he reduces his position size as he's having losses, and he increases his position sizes, his position size as he's finding himself in profitable trades, and that's a very, very viable risk management strategy. And basically, essentially, to use an analogy, you're pressing on the gas pedal, right? When things are going well, you're releasing the gas pedal when things aren't going that well. But there are other risk strategies, out there that you could potentially use. You could just stay out of the market. Is if this current market phase isn't favoring your particular approach, it's very, very viable to just stay on the sidelines. You don't have to trade anything and everything, right? You could just pick just your niche sort of market phase, and just stick with that, and press the gas pedal when it's your kind of market, and then release the gas pedal when it's not your kind of market, not your kind of market conditions. um so staying on the sideline, very, 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 very very, very viable as well. What you could also do is that you could have a different strategy for different market phases, right? Just so that you can minimize those paper cuts, right? And lastly, I'm a big fan of trend trading, because when you're trading with the trend, you're going with the flow of things, right? You're not fighting the current. And fighting the current, this is how you get those paper cuts, right? But if you're trading with the trend, by default, this method, it minimizes those clusters of losses, Sam. So those are some best practices that you could utilize to sort of become a better risk manager. But at the end of the day, once again, it's a risk management game. Very simple.
Yeah, I mean, that sums me up, to be honest. I tend to, I describe myself as a mean reversionist. So I actually do tend to fight potential trends, or and I mean personally, I mainly trade smaller caps, and a lot of my system is based on entry signals of when actually there's going to be a potential reversal of that trend.
Mhm.
But obviously, like at times, it can lead to perhaps the negative aspect of it is it actually sometimes you can obviously you get the entry signal wrong, sometimes actually you can go, obviously it'll continue to go against you, and whilst you may stop out or what actually you can then try that one too many times when clearly the trend is still intact, and obviously you're
Mhm.
just getting it wrong, and then all you're left with is fighting, as you said, you're fighting a current,
Mhm.
which is difficult because I mean,
Mhm.
No one's going to be able to fight a current. You're going to be swept out to sea.
Right, right. Yeah, that's exactly it.
Yeah, completely, completely. It's such an interest. I mean, it's so interesting how like you're focused on like the mental side of trading actually leads you to become more in tune with how you are as a trader in terms of how your system plays out. And actually, I suppose it sounds like over the years that you're just so confident that over the long run, you're going to make money and you're just going to let those chips, you're almost like the blackjack dealer at a casino. You just deal the hands and occasionally the customer's going to get a blackjack and so be it. You just let the chips fall as they do.
Mhm. That's exactly it. Look, I've been in the market for many years now, and I've been trading the same strategy for many years, and I have thousands of trades under my belt at this point. And when you go through, thousands of trades like that, nothing surprises you, right?
Yeah.
I'm just flipping my metaphorical coin over and over and over and over again. That's all I'm doing. And unless something dramatic happens that I didn't really sort of conceptualize or plan, very often I'm trading with stability of mind, with composure. Losses, they don't phase me the way they used to in the in the past. And profits as well. I don't get excited anymore, right? Like I used to. And that's, there's no magic formula, Sam. Experience, practice, showing up, ongoing skin in the game, and just over time you get better. Familiarity breeds indifference. I love this quote.
That's such a great quote. And I suppose then as like a parting topic would be to just, because I think it's great to say it requires experience. And I completely agree that once you get that confidence, breeds more confidence, and consistency breeds more consistency. But the issue a lot of the time is that a newer trader or someone perhaps with less than 5 years experience is expecting to hit the holy grail so quickly. So perhaps like what are some of the strategies then to, I mean, if someone's in year one, what's the strategy to get them into year two when perhaps they're not consistently profitable yet, or perhaps someone who's trying to fight too hard to get into that next level and then isn't able to? I guess what I'm saying is, how do you buy more time?
Mhm. Right. Very often it's very difficult. Look, trading is a solo sort of journey on the retail end, at least, right? And it's very difficult to make progress when you're just going about it alone by yourself, right? So something that I've seen over the years that really accelerates traders' progress, especially newer traders, is surrounding themselves with the right kind of people, right? Yeah, trading typically takes years to master, right? But you can collapse that time into just a few months, Sam, by surrounding yourself with the right kind of people who will support you, who will challenge you constructively, who will push you to do what's hard, right? I mean, look, most of the traders that we work with, they're consistent by the time our work with them ends, which is 3 months. Why 3 months? It's because it takes on average 2 to 3 months to build a habit. And what we're concerned with during our time with these folks is the habit of behavioral consistency. We don't care about how much they make, right? Personally, as a coach, I don't care about how much these folks make. What I want to see from them, what I'm tracking them on, is behavioral consistency. I want to see this trend in the right direction during our time together. I want to see that composure trend in the right direction during our time together. And so, because I know that if they have that, they have everything. The world is their oyster, like really. So this is what I track them on, and we're with these folks every single day during the trading session. We coach them during in live trading, right? And when they're making a decision, we are there with them. When they're closing a trade, we are there with them. So so that kind of close accountability, that kind of sort of close support. I mean, as you can imagine, it's it expedites the process.
Yeah, yeah. No, I mean, that's incredibly helpful. And I mean, that's similar to, I suppose, how a lot of pods, like we call it term pod, a lot of the time, then if that's the term you're familiar with within trading setting, but like how you talked about that close network, someone who, like you said, can hold you accountable, offer you constructive feedback. So those that obviously you are coaching, are you coaching them? Do you coach them your system, or are they coming to you with a system and they're like, this is what I'm going to do today, and then you hold them accountable to that?
Yes, so they come with their own system, with their own edge. It's just that we review, we see them, we review their process just to see that whether it's statistically viable. Because very often what happens, Sam, is that I talk to a lot of people, right? And they tell me, oh yeah, Ivan, my edge, I have an edge in the market, right? But when I actually look at it, I see that okay, sure, it makes sense, but it's not optimized for profitability. And so this is why I like to review their process first, just to make sure that it makes sense. And I give them feedback. I tell them exactly what I like about it, what I don't like about it, and why. Very important because they need to understand the why of it, right? And then from there, when when that piece of work is done, and we work with them during the trading session, and we give them that ongoing coaching, that ongoing accountability, that ongoing feedback, that occasional tough love as well, because tough love is part of the process. Look, if you're paying me to sort of to help you, you're not paying me to sit back and fool around and sugarcoat things for you, right?
Mm.
You're paying me because you want results fast, ideally within 3 months. So if I see that you're not following through with what you said you were going to do, I'm going to be very honest with you. I'm not going to be sugarcoating things for you. I'm going to be very honest and direct in terms of the feedback that I'm giving you. I'm not I'm not there insulting people, Sam, right? I'm a very mild-mannered, soft-spoken person. I'm very, very patient. But these people, sometimes they need some tough love, just to steer them in the right direction. Because a lot of folks out there, they don't have a mindset conducive for success in this highly uncertain space, right? And success in trading, it really requires a particular kind of mindset, a mindset geared towards growth, a mindset that prices in uncertainty, right? In every trade, and just a mindset that's empowering overall, right? And some people, they need to get yanked out of their old sort of behavioral, mental patterns, and sometimes we have to provide them some tough love, but it's for their own good, right?
Yeah. I
And
mean,
so,
I'm a firm believer in tough love, but it's interesting that I mean, describing yourself, obviously you come across very softly spoken, but I also sometimes think that's the scariest and best type of tough love. In the
mm,
same way, I used to remember my dad he's actually he's a very nice chap, but sometimes his tough love would be, he was just disappointed in me. He would just say,
mm,
I'm disappointed. And that would just cut so deep, and that would be
right.
like the biggest lesson to me. And I
Mhm.
got to be honest, yeah, the thought of tough love from you definitely would inspire me to make sure I wasn't continually making the same mistakes. That's for sure.
Look, it doesn't come from a place of just it comes from a place of really caring about these people, Sam, because I care about people. I want to see people grow and thrive and become better versions of themselves. I'm very, very passionate about this line of work because I struggle with these things myself. I have struggled with them big time, and I know what it feels like, right?
Mhm.
And so, uh, yeah, look, sometimes when I look at these people that kind of change 360 turn they were able to make during our time with them, it it makes me tear up, right? And I have no shame of saying this, but it just because some of these people, they're broken, right? They come into trading with so much baggage, and without the right kind of support, it's virtually impossible to make it in this space. So this is why I get emotional sometimes when I see that change. How they were able to change in such a short period of time. It makes me emotional because it's just so inspiring and so empowering as well. To hear that. So yeah.
Just no, that's incredible. No, that's incredible. Absolutely incredible. And I mean, it sounds like that's one of the most rewarding aspects of
Mm,
coaching. And I mean, you need that success. Again, it's the same in the same way. I'm just interested. I'm definitely interested though in obviously like someone's come to you. You've refined their system. They've got their. I assume they've got like some sort of trading plan for the day or whatever it is. What are like the most common like issues then? Like what are people are doing? What's probably the number one thing that you are having to perhaps deliver some tough love on?
Mhm. Right. So, the very basic and common trading errors most of the time, FOMO, trading, placing trades they know they shouldn't be placing,
Mhm.
right? Stuff like that overall. But and going in with a much bigger position size than they're supposed to, and so we help them fix those different behavioral issues. But one of the biggest problem that we encounter with traders is the lack of honesty sometimes. And if you're not honest in terms of, look, because we're working sort of online, right? So I'm not behind their back watching over their shoulders, right? So sometimes some of these folks aren't honest in their reporting, and this is a, I mean, how can you grow if you're not honest, if you're hiding things from us, right? So radical honesty is such a big part of the work that we do with them. If they're not able to be radically honest with us, then we can't help them because we can't give them the feedback that they need to steer them in the right direction, to help them stay on that consistency bandwagon. So radical honesty is very, very important. And look, most of our students that work with us, they come out of our program consistent, but about 2% of the folks that we work with don't, and that's because they don't show up, and just honesty is just not there. They're placing trades and they're not reporting their decisions as they're making them, and it's just unproductive at this point.
Yeah, that's such a great point as well. Like, would you go as far to say as like honesty is one of the most important tools that, and sort of the biggest way that a trader can help themselves is if they're honest with themselves? Because I think we've all been there where perhaps like there's a trade perhaps we don't want to review or we don't want to discuss because it's so painful, and you perhaps don't want to go to your either your mentor or one of your good friends, and you perhaps don't want to talk about it because you know it's such like a horror show. But actually, is that the conversation that's going to make the most meaningful change?
Mhm. Yes, absolutely. Look, um, the question that I often ask my students is this: who do you think you need to become to get the results that you want? And according to you, is your current self aligned with the person who can achieve those results? And usually I let them ponder a little bit, and but their answer to this question is very telling because it shows whether they have the introspection needed to make it in this space. And because look, um, this is, I mean, trading requires a lot of sort of, you know, that capacity to look within yourself, because there are so many, things with us. There are good things, there are bad things, there are ugly things, right? But that honesty with yourself and just being honest, putting your cards on the table and be like, okay, those are my weakness, those are my strengths. With your help, we can potentially leverage those strengths a bit more, right? If you don't have that honesty to begin with, it's just difficult.
Yeah. I got to be honest, this conversation, I've found it absolutely fascinating and I've enjoyed it so much. So thank you so much again for joining me this evening.
Mm.
And I think like it just resonates so much with me, and also it resonates with how I describe, because a lot of the time, for example, like someone will come to me or come to discuss an issue. And sometimes I'll say something quite simple, like, what's the name of your setup? And if they haven't got a name, I mean, like, this isn't for someone who's got 20 years of experience. I get you're past that stage. For someone in 6 months in, I'm like, what's the name of your setup? And if they can't name it, they're like, okay, but they're trying to like approach it with like it's a mental issue. But I'm like, actually, it's a combination of everything. And actually, you've got to go back to the drawing board as well with your system. And I think that's what's most illuminating about this conversation is that as someone who's obviously, a training coach and a mental coach on that side of it, you're also talking about actually is a lot of it comes down to system, how well prepared you are. And actually, can we really talk about what FOMO is? If you can't tell me what your system is, how can we talk about FOMO, for example? Or how can we talk about patience?
That's an excellent point. Yeah.
Thank you.
And no. Yeah, I mean, there's, I don't want to water down what you just said there, because that was really, really powerful. Yeah. If you don't even know what you're looking for in the market to begin with, I mean, yeah, what is? I mean, you're gonna feel emotional by default, right? So, knowing your system and knowing why it works, and that, I mean, very, very important.
Yeah, absolutely. So thank you so much for your time this evening. Just for our guests, where can they find you? And obviously, I know you've got you're an author as well. Where can they find your book?
Right. So my book is available on Amazon and elsewhere. And it's called Trading Composure. And in there, I talk about my own personal experiences with uncertainty. Talk a lot about uncertainty. I mean, Wiley and Sons, the leading publisher of financial literature, they offered me a book deal to talk about this very topic. That's because I mean, with all humility, I can talk quite insightfully about it, because once again, I've spent a lot of time studying it. You know, just on so many levels, whether spiritually, mathematically, personally, experientially. So I have some insights that I share about this topic in the book, and then I'm available as well on Twitter, X now, and my handle is Trading Composure, and my website is tradingcomposure.com, and so you can find me there as well. I have a weekly newsletter, and that's followed by well over 30,000 people at this point. So yeah, you can connect with me there as well.
Brilliant. Thank you so much for your time this evening. I say this evening, it's this evening for me, but I mean, it's probably afternoon for you. So thank you so much. It's been an honor. And I've absolutely loved the conversation. And thank you to everyone for watching. Go check out those links that Yvan just shared. And yeah, we'll see you all for an episode 2. Thank you so much, Yvan. Thank you so much.
Thank you once again, Sam. Take care.
Thank you for tuning in to this latest episode of Trading Takes. Don't forget to hit the like and the subscribe button. And if you enjoyed this conversation, please check out some of others with some great traders. Thank you for watching.